Hi everyone, this is Pete. So last night we had another crazy rate night. So let's take a look. Where are we in terms of the market? Is it ready to pull the trigger yet? Okay. So let's take a look at S&P 500 first. Let's look at all the index. So you can see that right now the S&P 500 is right at the 200 moving average. Okay, this is the daily chart for 1 year. Okay, just to zoom out for those of you who are not watching this yesterday, right? Yeah, it's at the 200 moving average. Right now it's still deeply red, but good news is RSI, we are almost there. Okay, are almost there. Let's take a look at Nasdaq. Okay, Nasdaq has actually fallen beyond the 200 moving average. Okay, we are at the RSI. This is deeply red. Now, I just want to bring us back to the last time we saw this, right? Which is actually the March of 2020. Okay, so you can see it's a vastly different market, right? It looks very different because the previous one in March, actually, when the way it fell wasn't so clear cut. So many people were caught off guard, and that's why beyond that it continued to fall to about 6,000 points. Okay, but right now what we see is there seems to be a persistent push, right, for the market to go down, right? And that is why I say everyone, we need to be a bit more patient. Okay, wait for the signal of bounce. Right now, to be very honest, is my portfolio red as well? The answer is yes. Okay, but red means good. Why? Because when your portfolio is red, it just means that the stocks that you're holding right now is even cheaper than before. It's at an even better price, right? So once again, let's analyze Nasdaq more closely. Right, so this is Nasdaq here. So you can see that it is actually bouncing off the 50 moving average. There's a rejection here. Okay, right. So what does this mean? This means that those of you who are holding short-term contracts, right, you should have exited on this side. But for me, right, and for those of you who are holding long-term contracts, there's nothing to worry about, because if you're holding a 2.5-year contract, the next thing you want to ask yourself is what company is behind the contract, all right, for options, call options in this case. Okay, so I think there's still a bit more to go. Why? Because just simply looking at the Nasdaq, right, it is not really mature yet in terms of coming up to form pink. Okay, and we just got to our RSI level. Okay, so let's look at some of the key movement yesterday. Now, before I go into stocks, I just want to give you guys an update on crypto. Crypto also had a massive red night yesterday. Okay, so right now crypto and the stock market kind of move in tandem. They are both risk on asset right now. Okay, now looking at all the sectors, okay, just take a look at the sectors. You can see that overall broad base, everything fell yesterday, including the darlings like energy, okay, financials, and utility. So this is not usual, right? This is not common. We seldom see everything fall together. Usually it's a kind of sector rotation. Some are up, some are down, right? So I'm getting excited. I'm waiting for the signal to pounce in. But right now it seems that there's more leeway to drop, right? The one that barely held on to it was consumer staples. Okay, so this is the sector. You can see the Nasdaq fell about 2%. Okay, over here, DJI, Dow Jones, also went down, right, to about 200 moving average. S&P, we mentioned before, is right here. Okay, let's look at some of the disruptor stocks. Okay, so let's sort by dropping. Okay, so what about Netflix? Now, Netflix had a very massive night because in the recent earnings, while they did beat expectations, okay, all right, but their forward guidance was very poor, right? Their forward guidance was very disappointing. So therefore, the market punished it by dropping it right down. And you can see actually in the top few that drop are mostly the high growth companies. Okay, so I know many of you here may have held high growth company, and this once again talks about the importance of diversification. Okay, now I just want to share how I deal with diversification. For me, I don't really diversify a lot, but I diversify to the extreme. Okay, so for example, I do have over here C Limited and Roku in my portfolio. These are my high growth, right, ultra high growth companies. But on the other end, okay, I also have the bulletproof or the resilient company, okay, the S and the I company over here. Okay, so let's take a look. Which are the SI companies over here? So for example, some of the SI company that I have is Nike, P&G, AutoZone, right, and also Otis. Okay, Otis is basically the leaf making company. So this kind of helps to balance out the volatility a little bit. Okay, but once again, actually the volatility should not be a concern. In fact, right now, most of my attention is focused on the growth company and seeing when is the opportunity to pounce. Okay, so for example, some of your big growth companies like Shopify, Facebook, Visa. So when everything is coming down together, actually I'm quite alright. I'm quite happy. Why is that the case? Because it just tells me that there's nothing systematically wrong with the company that I'm investing in. Right? Think about it. If you are in a bull market, everything is rising, but only your stock is dropping, then that's where you should be worried. Okay? But right now it's kind of like, the tide is receding a little bit. Everyone is suffering the drop in the tide. So what does this mean? This means that eventually when the tide returns, things should elevate again. Okay? For those of you who follow me on the public channel or my YouTube channel, I did talk about recently why I think the market has a bit more leg room to go. Okay, mainly due to the Fed tightening and the fact that the US dollar is strengthening, right? But that doesn't change how I invest. That just helps me to understand the volatility coming forward. Okay, what it should do is to prepare you to take advantage of the opportunity in front. Okay, so let me just share very quickly what are the few things that I would suggest for you guys to do. First and foremost, if you are able to accumulate more funds on the side to enter when the opportunity arises, right, do that. Okay, so don't worry, when the opportunity arises, the OMM community here, we will tell you, that we are starting to enter gradually, bit by bit, alright, so that we are all in it together. The second thing is this. You want to look at some of your poorer companies that are not performing well, right, to use those as a cash reserve. What do I mean by that? So let's say you bought some company previously, maybe on impulse, maybe on some stock signal that you actually never wanted to own those companies. Alright, maybe some of you have sold some puts and you got assigned companies that you were just going after the premium, but you don't want the companies, right? Now, even if at a loss right now, that might be a good a strategy, right, for you to sell those companies and retrieve back whatever cash remaining there is, so that this cash can be used to buy the companies that you truly want to buy, right? That you truly want to invest in. So for example, if you invest in a very poor company previously and it fell 20-30%, you're losing 20-30%. But guess what? That means the company still has about 70 to 80% left in cash value that you can actually extract out and buy a good company that you're looking to buy, right? So these are the two things that I'm mainly doing right now. I'm accumulating more cash, and if I can't accumulate more cash from active income, what I'm doing is I'm re-strategizing, reallocating my funds, right? Because during a recovery period, the strongest company will move the fastest. Okay? All right? So let's take a look at some of the other companies that fell, right? That it could be interesting. Okay, so let's look at Bulletproof first. All right, so let's just look at one by one. Facebook coming down to support level, right? Okay. Now Disney is also continuing to drop, right? This was the previous chart that I drew for Disney. So you can see that usually whatever you predict, it might not exactly be what you want the stock market to do. That's why the key thing is understand where's your diversification, where's your balance right now. Okay, where is that barbell portfolio for you? Okay. Alright, Visa recovering very nicely, but had a really little rejection here, okay, on the 200 moving average. So right now it's on the way down. Definitely not ready to enter yet. So you can tell, on the market level and even at the individual level, we are not seeing a lot of signs of readiness, okay, to go in just yet, right? Nvidia coming 200. This is not mature, but this is almost ready, okay? TSM, right? Semiconductors, supposedly to do very well, right? It did, but right now it's coming back down to the support level again, okay? In fact, I think there's more room to go because you can see the RSI is nowhere near the bottom, okay? Google, we talked about it yesterday, at a 200 moving average now, it pierces through, right? Which is why it's very important, guys, very important to wait for the bounce, right? Because if it bounces, then you enter, yes, you may enter at a slightly higher price, but guess what? That is a kind of confirmation, an assurance for you, right? But if you don't wait for the bounce, this is something that you may experience, okay? All right, and let's look at some of the darlings like Berkshire. Berkshire also reacted accordingly over here. Microsoft, almost at the 200, not ready yet, almost, okay? So there are a lot of such companies right now. So guys, what I want you to do right now is this. Ask yourself, okay, what are the steps you can do to raise more cash? This is something that we have been talking about on our market updates on a monthly basis. Every month, me and Ian, I think for the last 4 months, we have been telling people, raise cash, raise cash, raise cash. So I hope you guys have raised more cash. And if not, it is never too late to raise some cash, all right? And when the market starts to turn, you see the confirmation, you can start to enter again. So the second step is this. What are the strong companies that you are comfortable to invest in? Now, of course, you can ask for stock idea and stock tips. Yes, you can borrow the ideas, but you can never borrow the conviction. Okay? For example, just now I told you about Otis. It's a company that I researched deeply. I understand the company. But if you have never researched into that company, if the stock price were to continue to fall another 20-30%, it is hard for you to gather that conviction as well. Okay? So there are a lot of stock ideas in our Facebook group, right? Do go to the guide section and take a look at stock ideas. But the most important thing is ask yourself, which are the companies that you are very confident with, okay? Because there is no such thing as the perfect portfolio where these are the specific companies you must invest in. No, right? There is a portfolio for every single one, depending on your understanding of the companies. Okay, so ask yourself, what is your top 10 at least, so that when the market presents more opportunity, you can start to invest in them. Okay? So any questions, put in the comments below. Myself and all the other mentors are here to help you. I'm going to do a more frequent update, hopefully on a daily basis, so that whenever I see the market starts to have an upturn, I will let you guys know on the first notice. Okay? Alright, see you guys next time. Bye.